Welcome back. And as I said, that these two, we will look at some longer term charts so that we can see what the world is telling us. And we're using a weekly chart and we use two moving average, a 40-week moving average and a 20-week moving average. And the next one that I want to look at is the Nikkei of Japan. And we all know that Japan has a difficult market to trade in simply because the government is buying shares there, they're selling shares there, but there's something else here. And if I must compare the Nikkei from Japan, and I must compare the Hang Seng, then I would rather say I'll put my money into the Hang Seng because that just gave us a beautiful golden cross. But look at this one. This tells you that this index doesn't want to make up its mind. And this triangle formation is either going to be a beautiful bullish flag and it will be a continuation of an uptrend because there was the sell-off in 2020. It rallied up. It's building a massive base. And yes, above 28,100, we can see that this flag breaks to the top. And where can it go to? Let's have a look here. Then the Nikkei can maybe surprise us all the way and give us a beautiful leg to the upside. But I'm just a little bit nervous. I think if it doesn't break above this line and it doesn't go for this target, and that target is sitting at 30,551, I think we'll probably see easily a sell-off here. But that sell-off will only happen below 25,915. And for me, I mean, you can almost say the uncertainty around these moving averages just tells you that there is definitely a problem with this index making up its mind. But there you are. There's the Japan index for you. Let's have a look at the FTSE. And this is where this chart's showing me some really interesting things. And that is telling me that although the world is so negative, some of these indexes are really moving extremely well. Can you believe it that the FTSE in 2020 was sitting at 5,022? We are close to 8,000. With all the problems, I mean, this chart is now 7,700. So at 8,000, we are on an all-time high. And look at it. It just gave us a little tiny pullback in October. And since then, it just rallied up. So the index that's standing out, that is lagging, is in actual fact the Hang Seng and the S&P 500. The other indexes, like what we've seen now, is either marking time, like the Nikkei, or in our market, we're not far from an all-time high, and even the FTSE. So if you want to play the dogs of the market, it is the Hang Seng and the S&P 500. And for me, if you look at this massive trend line, it just shows you nothing can go wrong with this index. It is beautifully working higher. And look at this, a massive ascending triangle. Oh, well, this is going to be not ascending triangle, but a rising wedge. And we know that a rising wedge eventually give you a break to the downside. But I mean, it's early days. We bang in the middle of this wedge. So the best is just to wait and play poker face there. Let's have a look at the DAX. That's the German market. That's also a European market. And we always hear that the German economy is struggling. But look at this market, close to an all-time high. That's now trading at 15,600. The all-time high was at around 16,100. So what does it tell you? It tells you that there's the golden cross, the 40 and the 20-week moving average crossed over, and it looks bullish to me. So with all the problems in Europe, Credit Suisse, UBS, some of these other banks that is really struggling, it just shows you that those economies are resilient and they are telling you that the money are still flowing into indexes, although we're sitting with high interest rates, although we sit with a lot of uncertainty, but now we're starting to go and look at something else. And this is worrying me. Let's first of all look at the gold price. And remember, gold, we all know, is the commodity that people run to when they are unsure. So on the one side, we've got these indexes very close to an all-time high. And then you see gold also right at the point. If you look at, I'm going to draw that line. Just have a look here, you will see. I just want to use this line. There you are. I mean, there's the previous high, 2040. And that was on a weekly close. And we are so close. I mean, we can easily see that going all the way up. And for me, look at it, a beautiful rally. And everybody is just chasing money into gold now. So what is it telling us? It tells us that the momentum of gold is 100% in play and in place. And everybody is believing that we're going to see a brand new high on gold. What makes me a little bit worried is that gold is flying. It's on the brink of making an all-time high, to tell you that people are very, very nervous, and they worried about the stance of markets. That's the one thing. And on the other hand, you see that indexes are not that far from making some new highs. And that worries me a little bit, because that tells me, if that is the case, let's have a look here. Look at gold there. Beautiful channel there, ascending channel. Nothing wrong with that. It came back to test it, and there's the golden cross. So for me, it's quite simple. It just shows you that if you look at this, oopsie, sorry, if you look at that, it is quite simple. You need gold to break above 2040 to make everybody excited here. So for me, very interesting. Gold on the one hand, nervous, and some of the other markets very close to an all-time high. Let's have a look at silver. And silver is the one commodity that always lacks the gold price. Everybody says, but silver is way behind gold. Yes, it is. If you look at that, let's have a look here. Let's use that little line there. There was the all-time high for silver. There you are. Let's have a look there. There you are. Silver's high, and that was in 2020, July. The high was $28.30. But look at this rally, straight up. I mean, it definitely, I think it catches up on gold, but it's not close to an high. So for me, there you are. There was the dead cross. There's the golden cross. It just tells you silver is on the way up, and it is looking bullish to me. And everybody is keen on that. And to now finish the show off, let's have a look at oil. Oil is telling you, if you look at Brent oil, remember OPEC cut some production here. Let's have a look here. I just want to take that out. And what do we see here? Suddenly, Brent oil on a weekly chart. Remember, there's the 20 and the 40-week moving averages. I'm going to show it to you. They are still in a dead cross, but if it carries on and it gets to about $92, $94, we can easily see a golden cross developing on Brent crude oil. So, very interesting. If this is going to rally, we know that inflation is back on the cards. That's the one thing. And if inflation is back on the cards, we know that interest rates cannot go lower, it will go higher. And what will it do eventually to markets? We know that markets don't like high interest rates. So we've got a mixture of things here. High gold price, a lot of indexes almost on brand new highs. Brent oil starting to turn around, showing you that above $80, there's definitely momentum to the top. And where does it leave us? That leaves you with one thing. Diversify. Maybe look at indexes that's really under pressure, like the Hang Seng, and look at the index that's quite toppish. They can easily pull back a little bit, or some investors will say, let's take some money out of these wonderful indexes like South Africa, like the DAX, like the FTSE, and maybe move some of that over to the Hang Seng and move some of that over to the S&P 500. But oh dear, if the S&P 500 breaks below 3950, I will be very nervous with my money in the markets. Thank you for watching this special show. We will chat again. Visit our website www.fransklerk.com for more info, and we will chat again.